All right, recording is live, and we are in the trading floor with all the cool kids. So this morning is Friday. It's quad witching day, so I'm not personally going too heavy on anything in my big accounts. Obviously, we have the small account here. And I just kind of wanted to re-summarize what I shared yesterday. This is the 3-month P&L of this account, and it's mostly just dividend rolling. I'm not doing a whole lot of speculation and like options and stuff. Now, I did take 2 losing options trades with a $500 amount just to max out my my capital losses for the year, so I can claim those on the taxes going into the end of the year. So I don't have to worry about any of that stuff. And these are just the positions I have left. I'm probably going to close out MBI today. It's a special dividend stock. Let me just go ahead and move this over here because the market's open. Let's pull up MBI. There we go. So it's 2.77% down. It still has a lot of upward potential, despite the fact that it's basically a hype on an $8 special dividend. But that doesn't mean we can't trade the hell out of it. So I initially bought 9 shares, and then I locked in 8 of those shares already on the way up. So I just have this 1 share left. I'm guaranteed net profit, even if this stock completely delists because of the amount that I locked in on the other shares. Okay, so that's kind of the name of the game, is just working the numbers. And then I can still continue to hold this through the XDiv on Monday if I want to, but I don't have to. And that's kind of where the benefit of trading a system comes in. So I'm just going to quickly recap these, and then we'll get into some live trades. SSIC is a special dividend of 45 plus 25 cents, so 70 cents per share. XDiv is Tuesday, I believe, 19th. Yeah, Tuesday. And then so when the XDiv hits, the share price, since they're my first shares that I bought for this ticker, they'll be adjusted by that 70 cents, and then I'll get that back in cash form when the dividend payout hits. But I just break even when I do that. I don't really make a profit. So what I can do in the meantime is trade the share P&L, and then if it goes through the XDiv date, I get the adjustment, the price comes down here, I can move my stop loss from up here, which is the same size as the dividend payout, right here to break even, and then the difference there is my net profit. So still make a profit either way. If the price just keeps dropping, I can always just recover the position. It's the same outcome. It's just a matter of working the numbers, basically. So HTHT is another one. It's just kind of chilling down here in this channel, waiting for it to continue to push up to the upside. XDiv date is Wednesday, so I got plenty of time. If it goes up and sells, I can re-enter for the XDiv if I want, but I don't have to. So IIIN, that's a $2.50 dividend payout with a 3-cent quarterly dividend. I've already locked profits, and I did not re-enter that one. Same with Kim. I think I traded that one like 5 times. I can click this, I guess, just to kind of recap really quickly. So these are all the buys and sells I had for Kim. So I've taken that, 29-cent dividend or whatever, and I rolled it multiple times. So same with IIN. I've done it twice, and now I'm still eligible for the dividend payout of $2.50 per share on the payout date. So easy money. So let's get into the live. Oh, sorry, I forgot. I got to go through the rest of my positions. A little ahead of myself today. IRMD is another one. I didn't set a sell order because I had I bought it on unsettled funds like a fool. But I could probably go ahead and sell that now. IRMD. So I'm looking at a 48-cent dividend plus a 15-cent dividend. That's a 63-cent dividend. So let me just go ahead and sell that right now for $2.51. Because I don't need to hold the stock. I can choose to re-enter it if it pulls back and then continues, but I'm just basically taking the payout that I would normally get here plus some. So sooner, higher, I like it. SFE, it's another one. I think I rolled this one twice. Nope, just the once on this one. I'm thinking of a different stock. It's just chilling at support, nothing crazy going on. It's got a 35-cent dividend. Now this is high risk, obviously. It's not fundamentally strong. So I'm just trading kind of the speculation side on this, but you can see I've got a nice fat sell order up here at 35 cents plus, just in case it runs early. Otherwise, when the dividend gets separated from the share, I'll just move my break even down to here, and then I'll just recover that when it goes through. Clip and Tesla are high yield, high risk ETFs. Tesla just paid quite a bit, so the account's up a little bit, but we're just kind of recovering from that sell off, and it just follows Tesla, so I'm not worried about this at all. This will be a long-term position. JP Morgan here, JP Morgan equity ETF, same thing. It's just kind of growing. I'm not going to look to sell these until they hit 5 years worth of profits, or worth of share price. So OCSL, this one is past the exit date. So you can see I moved my break even right above, or my sell order right above my break even. That way I get the dividend payout plus the share P&L. And that's kind of that's how I make that net profit rather than just breaking even when I get that adjusted offset. UVE, same thing. I've got my ex-div date, so the price was adjusted. Move my break even up here, so then this becomes my profit rather than just breaking even. Schwab US dividend ETF, that's going to be a very, very long-term hold. It's a quarterly payment, I believe. O is one of the best stocks out there. It's a very small dividend. It's 26 cents, but it is consistent, and it has grown over the last 25 years, I think, every period by some small amount. So this will be a forever hold for me. I just plan on dying with this stock. LADR is another long-term growth potential stock that offers a 90-cent quarterly dividend. So I'm just taking the speculation stuff, and I'm adding dividends into the mix. Johnson & Johnson, it's another long-term high growth potential stock with a nice fat dividend on it. And then there's MBI, of course, which I'll probably just offload today if it doesn't push. So enough of that. Let's start looking at some big fat stocks. So GETR obviously ran, pulled back, and then it looks like it's wanting to push again. But we'll let's make a little watch list for this stuff, and then we'll just let's do that. So let me make a watch list. Give me 1 second here, guys. And watch this. Call it daily stuff, right? Nothing crazy. You got Microsoft on, you got 70% on Microsoft, Lavian. That's good. Jeez, this guy's insane. Now, this is a 36 cent stock. I don't want to trade this on this account because that requires 100 shares minimum, since this is a small cash account. And it's a sub-dollar stock. So I don't want to risk $35 in one shot on the amount that I have available today, which is, oh, sorry, I had it on. Here's the upcoming dividends, by the way, just for the recording. So again, because I've already sold IIIN and Kim, I don't have the shares anymore, but I'm guaranteed that dividend payout. So it's just easy money over time. So I have $63 to trade with today, and I don't want to put half of that into this guy. So unless there's no other option. BRSH, it's another sub-dollar stock. I really like this one just for the hype potential, but I don't think I want to trade it just yet because, again, that's another $35 stock. This is garbage. I'm never going to touch that stock. Let me add this one to the day stuff. INPX, it's a 10-cent stock. It's trash. I'm not going to trade that. Just looking at the 5-minute chart here. NCSM, that's $18. This is Morse code. You can't trade that stuff on these lower time frames, so we can skip that one. ML, it's $47. Like, I could just skip right over that because, again, I have $60 to trade with, so I'm not going to go balls to the wall on that. Let me just look at something that has relatively decent volume and market cap, BRLI, and let's see if maybe that's the one we trade. Not on the 5-minute, we're not. Nope. Okay, so there's just nothing we can do with that. HLP is another one. See how close that volume and the float are, but it's selling off. So we'll add that, and we will keep an eye on it. And then tops. Let's go back here. We got that's a $51 stock. I don't really like that. I like swinging that one, but I don't like trying to day trade it. So let me just skim these really quick and see if there's anything rational that we can use. View I like. We could probably get a continuation on that fella. CCCC, of course, has a lot of potential just from running. That's got a lot of FOMO on it, and we can trade the hell out of that. It cannot hold profits, so it's not one I'm going to hold on to. And then ELAB is just low float trash, so can't use that. Okay, so let's look at our watch list, and we'll just pull up the 4x4 here. GETR, of course, is the sub-dollar stock, BRSH. So these two are ones that I'd need to buy at least 100 shares. So kind of don't want to do that. I do kind of want to grab some of this fella. Let's just buy 1 share just for fun. Looking at the spread here, it's only 1 cent, so I'm okay with that. All right, and you see I'm going to set a very, very tight mental stop right there, and if it doesn't go, I don't want to be in it. Right, I'm just trading this little engulf right here. Let me just go ahead and get rid of that as well. I really don't want to commit money to these guys. All right. And of course, I'm just using one share just to kind of demonstrate to you guys. Yeah, let me get an order ready here. This one looks like it might push a little bit. I'm going to wait for that to happen, though. I don't want to just jump the gun on it. View is probably going to be the runner for the day, but I don't want to FOMO into that when it's so high. I want to see it pull back. I think GETR or BRSH is probably going to have a little pop soon. It'll probably be this one, but I want to watch this one because there's bigger potential. If it runs, it's a nice little fib retrace there. All right, so if this drops below 105, I'm out. Don't want to risk it. So as soon as that hits 104, I'm going to hit Control 3, and that'll close my position. Okay, there's no point in compromising on this stuff, right? I'll just take a 7-cent loss. There we go. I'm out. Not a big deal, right? 7 cents down. It's not the end of the world. This one here, I'm waiting for a little bit of a retrace if I can get the drawing in place in time. All right, let's go ahead and use that. So this one, I kind of want the price to come down and then see a confirmation to the upside. So it looks like these are all just going to start selling off in sync, which is kind of why I was not wanting to jump into these just yet. But this one is the one that I really, really have an eye on. So let me just go ahead and bring it down to these two. I'm going to get rid of GETR, I think. Let me just look at the higher time frames on these guys. This one's kind of got some potential. It's got to go, though. I don't want to see it putter around too long. Yeah, HLP is not the runner for the day. Yeah, I'm kind of torn between these three. I think HLP is pretty safe to just ignore. Okay, let me kick it back down to the 5. And this is like I could very easily just use Stocks Buddy and just wait for those signals, but you guys don't like waiting for 5-minute candles to close a lot of times, so it's less entertaining. But here we have a very clean plan on view. That'll be like the easy trade. This one is kind of on the fence about it. So let me just get an order ready because I do kind of like this one, but I really want to see some strength step in on the time and sales at least. There we go. Okay, so I'm in that one. And really quick, what is the ATR on this fella? That's 5 cents. Okay. So 42 cents times 2 is 47 cents, roughly. So that's kind of the safest risk reward for now if it doesn't run. That's kind of the setup there. Just a really quick at a glance. And of course, I have my Control 3 set so that you can see here, it just closes the position automatically as a market order. So if something does go against me, I can close it really quickly. So not every trade has to be 100% runner. But I do like this flickering and fluttering. As long as it breaks to the upside and not to the downside, we're okay. That's the violence I like to see. Should be pushing, though, so I'm not too happy about that. We'll have to wait and see. Now, these two, again, were the bigger commitment stocks since I have to buy 100 shares. And you know, I'm on a small account, so I don't want to blow $35 of $60 that I have to trade with today just on one position. So I got to be very careful about this one. I think I'm going to switch to just these two. So GETR and View. I'm going to bring this one on top of the other here. And then that goes there. And then we have CCCC, but I don't know. I don't like it. I do, but I think everyone that was going to trade it has already traded it. I just don't want to FOMO into that when I've got a much better setup here. I'm also going to turn off extended hours, and then you can kind of see the territory we're in. Okay, I think I am going to buy soon here. Just kick it out of the 2 minute. I'm just looking at this guy to see if it's got potential to drop and then if I can get in or not. All right. And just to show you guys like how small and kind of insignificant this stuff might seem, this is a 27% profit on $35 on $66 worth of trading for the day, compared to a potentially 17.3% loss. So that's very risky. But I want to get in and out. So here we go. So we're in the mix. Just kick it under the 1 minute here, and we'll just kind of optimize this entry a little bit if we get one. So what I'm going to do now is I'm going to get the entry ready, create new order, buy 1 share at market, and that's going to be on view. And I don't want anyone to trade this. I'm just showing you guys how I do it. This is not an alert, so please don't just blindly copy me because I'm getting in. I want to see stop loss rate, and then I want to see it get absorbed. So let's see if we can get that. A bunch of people are just blindly going to jump in because it hits this level. I kind of want to be on the other side of that. not in the side that buys in and then just immediately gets stopped out. I save that for my other trades, my spy trades. Okay, so GETR is up 7.5%, 8%. I could lock the profits at any point if I wanted to. But that's not very captivating for you guys. So we'll just let it go all the way to target, and I'll trust the setup. Right? That's always better. Now, if that does break high a day, 44 cents, then that gives us potential for that to push pretty high. I'm going to go ahead and get into view here in just a little bit. I just want to keep an eye on the time and sales. We got about 15 seconds left. If that can push over there, I think I'm going to get in. I'll buy 2 shares. Why not? It's got to want to push, though. 4.399, and it has stopped moving. There we go. All right, GTR is 17%, 15%. I don't want this to be the top. I think it still has some push potential. I'm going to go ahead and get into view, by the way, here, and then I'm going to erase that, and then I'm going to draw a line here because lines make everything move up and down. Because the market looks at my computer and it says, oh, Pookie has a line drawn. Let's do that. I'm going to get rid of that. Actually, I'm going to get rid of all the drawings on this guy. And then I'll just redraw that one. Okay. And then I'm going to kick out the ATR really quick just to mess with you guys. Okay, ATR is 18 cents. So we double that, 36 cents up. 455.36 is 461, 491. Okay, so we'll do high a day basically. So that'll be the tentative target on that fella. I'm going to go ahead and get ready to lock this position here if it doesn't break over this guy, like right now. And maybe we take our profits early. Maybe we don't. It's 14%, so I don't really care either way. This one here is a 9%. Right? And what are we going to do if it keeps going? We're not going to feel bad, right? If it goes, we lock profits, we hit our target. That's exactly what we intended to trade when we entered. We knew there was a defined profit potential and a defined potential loss. We were accepting of both those outcomes when we started the trade, so we should be accepting of both outcomes at the end of the trade. But very often we are not because of FOMO and the cycle of compromise. So you have to be able to do that if you want to be successful long term. So this is a potentially 5.5% risk in exchange for a 9% profit. So you guys can see I'm still doing roughly 1 to 1.5 here. Now this one has to push. It has to hold this low. If not, we have like a level here if we really wanted to edge it, but I really don't want to do that. I don't want it to come down here at all. So we'll just see if it's going to keep pushing. As we put the analysis in. And remember, this is the 1 minute time frame. The setup's here on the 5 minute and higher, right? So here we're looking for a fib impulse, retrace, correction, continuation, I'm sorry. Here we're doing the same thing. So that's all I'm looking for in these trades. I'm not looking for any kind of fancy, MA crosses and, 1 minute, 1 minute this, 1 minute that. The setup is on the 5 minute. That's what I'm going to use to justify the buys and sells. The 1 minute and the lower time frames are just there for me to help kind of fine tune the entries and the exits. So we're at 22% on GETR so far. Let's see if we can, we're over high a day, obviously. Let's see if we can hold that and then keep pushing, or if it's going to fall down horribly. Okay, I don't like what it's doing, so I'm going to lock my profits right here on GETR. Okay, 100% out, no risk. That's it. Now, I could have just trusted the setup if I wanted to and sat on my hands, but I see something that I don't like. I'm going to go ahead and mark that candle, and that may or may not be the top of the morning, so I don't want to mess around with it. So just a small override. It's okay. Still got like 20 some odd percent. So view now is the only one that's left. And if you're someone who can't handle hindsight, or if you feel like you regret your decisions a lot of times, it might be best just to not look back at that stock. I see that happen quite a bit, and then that causes, like, that impacts your future trades. So I have $16 left to trade with today, so that doesn't mean I have to use it all. But I could if I wanted to. But what I can do is I can move BRSH, because that is getting there almost. And again, this is, at this point, I can't trade this one, but I can at least show you guys the setup, because I only have $16 to trade with today. And it would require a commitment of at least $27. So it just literally cannot happen. HLP, let's look at that one. This one, HLP is starting to find some support, which is good, but it's still not quite what we're looking for. We'd like to see a break over that at least. Now it's got this dollar to hold, and I just don't have a lot of faith in it unless it really gets some volume. Oh, yeah, there we go. I kind of like that volume, but that doesn't mean I'm going to buy it just yet. I'm going to start looking at it, though. I want to see that this support is going to hold, and to do that, I have to look at the time and sales in the order book. So there's a lot of support in this area. Let's do, you know what? We'll do 12 shares just to be a little more aggressive on that. Okay. So I grabbed some more sizable shares here, and I'm going to cut these pretty tight as well. I'm just kind of eyeballing this here. That's a roughly 10%. That's okay. Kind of like that. Now I could, I can, any number of ways I can do this. I can do the fib here, or sorry, the ATR is 6 cents. So that would be 13.19. So 119 would be the 2 times ATR target, just for fun. And let's see what that percentage is, just for funsies. That's about 9. That's just under 10%. So I was right around 10%. That's pretty easy. But I'm a little sketched about this. Now, what I could do also is I could just set my sell orders, right? I could set a bracket here, and it would just automatically execute when it gets to those prices. I just personally don't like doing that in case it just really starts to blast. It's good for the stop loss, but I don't really like to limit myself too much if it just wants to push. So let me just go ahead and look at GETR. So it didn't really go that high. It had potential to just blast completely, but it didn't. So that's kind of why I saw some things I didn't like, and I just wanted to get out of it. So I'm not going to let hindsight dictate whether or not that was the right move. It was the right move in the moment. So I don't want to be that guy. If you guys have any questions, feel free to ask as well. I don't want this just to be me live trading. The advantage to these is that you guys get closer access to us, and we can answer your questions real time. So if you guys have questions like, Pookie, what the hell are you doing? Why you smell so bad? You can ask, and then we can answer it. All right, so we got $9 in this one and about $12 in this one. So again, not huge amounts for a $2,000 account, but appropriate size amounts for what I'm doing. These are high risk speculative trades. Let me just move this down, by the way. I don't want it to break that low. Yeah, I don't want to put high risk and high dollar amounts together. I want to put small dollar amounts and high risk together, and then low risk and big dollar amounts together. And that's how you grow an account over time, unless you're super concise with that risk. And that conciseness with risk is not going to come on these low float top runners for the day. So I have a leap here for NEO. That's 2025 contract, January 17, 2025. That is lower risk. That is something I can cut nice and tight if I have to. LADR is a nice, solid company. It's something I can recover if I need to because I'm confident in the overall growth of that stock. So if there's noise, I'll average down. But overall, that stock has been and should go up pretty high over time. Plus, it's a dividend to offset any potential losses I do take, as well as to offset the tax burden on capital gains. So it kind of all just comes together. It doesn't necessarily just have to be one or the other. All right, so let's see if I have any. I got $3. Yeah, so I can't even add to that one if I wanted to. I was going to see if it would take off from this zone if I could add some more, but I don't think I'm going to get that. It is approaching the 10 o'clock mark, so that is something I need to be mindful of as well. A lot of these have potential to blast up or down right at 10 o'clock. That's just, algo switching over, people getting online, the successful scalpers leaving because they're done for the day, and then everyone else kind of starting to pour money in to recover their positions. So there's any number of things. I'm just going to look at the lower time frame here just to identify the underlying story here. See if whether or not this is potentially going to hold as a level. So I got about 2.5 minutes. We'll see if that holds this level that long. All in all, this is just a fib retracement. Boop, boop, boop. So we'll see if that holds. Let me check my realize. So realize P&L so far is $7.53 for the day. Again, it's not huge, but it's better than losing $90 or $300, right? Okay, we got about 1 minute and 45 seconds left on these candles. So let me just go down to the 2-minute here and we'll kind of see what we're up against. Okay, so 2-minute candle just closed. And then we'll go ahead and look at the 1 minute, and then we'll see if we get bullish strength on either one of these. GETR has definitely fallen down, which is good for us, right? Because we locked those profits. No point in second guessing that. CCCC is kind of going sideways. BRSH is going down. So it looks like we had some good picks this morning so far. Oh, there we go. So I'm going to wait for this to pull back just a little bit if it does. Just a little bit. I want to see kind of where that's going to go. If that breaks the low of that candle, I'll absolutely sell it. If it breaks the high, I'll stay in. Ooh-wee. So that gap just filled immediately. Yeah, I'm out. Bang. So we held it a little longer, but it just shot down. There's really not much you can do at that point other than watch the low of that candle and see if it breaks again. Looks like it didn't, but I just didn't like what I was seeing. Normally that should just blast right back up, and it didn't. So I'm not confident in that position anymore. Therefore, I got out. So what does that do for my realized P&L? It brings it down to 641 positive for the day. So not the end of the world. I get a nice little tax deduction that I can tack on at the end of the year, put it right back into my portfolio at refund time, and then just try it again until those dollars become winners over time. And that's all. You can't be scared to take losses. You just got to do it. When you're scared of losses, they get bigger and uglier and more stressful. All right. Now, what's likely to happen here, right? After we sold, they stop loss, they accumulated. It's likely that it's going to push up. And then that's going to kick in our hindsight and be like, you idiot, you shouldn't have sold that, right? Because then that rewards us for looking at the initial setup in the first place and then saying, I should have held, right? And then when you do that, you condition yourself to hold when things are not healthy. And rather than just, potentially getting back in with a safer stop loss and all that good stuff, what you do is you tend to hold your losses, and then not all of them come back up, right? And that's kind of what the market relies on. It needs that volatility, and it needs that that instability, sorry, in your decision making, right? Because that's how they make money. They have to take your shares. In this case, it was 2 shares. I don't really care. Go nuts with it. Go crazy. Take your kids to Disney. But we have 2 outcomes here, right? It'll come back up and keep pushing, and it'll hit that target, and then we'll say, oh, we knew better, right? That's confirmation bias. Or it won't come back up, and it'll just keep going down, and we'll ignore that result. We'll be like, oh, I'm moving on to the next trade, right? You don't even really take time a lot of times to congratulate yourself for making the right call in the moment and having that stop loss protect you. We only seem to focus on these where the hindsight kicks in and we see that confirmation bias, and then that messes us up in the future. So if you're constantly finding yourself in a cycle where you stop out of stuff and then it runs, you need to also pay attention to the times when you stop out of something and it doesn't run, right? Your brain just doesn't give the same priority to those, and that's where people hurt themselves. All right, so we are at the 10:02 mark, so it should have moved in one direction or the other. So I'm interested to see where this one goes on HLP. I can go ahead and I'm going to get rid of this one because we understand there's 2 outcomes there, and I'm out of the trade. So there's no point in staying in that or looking at it, right? Because it's not good for your mental health and your decision making. So let's just kick it up here and we'll look at the daily time frame. So this is the overall trend, right? We're pretty significantly bearish on this stock, which is why we don't want to hold these runners so frequently. We're just trading the bounce, the little correction here. So hard sell off, 25% pullback, gapped up overnight, and then it's pulling back down. So not exactly a solid trade. So we're just kind of catching a correction within a correction. So if I'm just working down through the time frames here, we're really just trading that correction off that correction. So not a huge trade. That's why I'm capping those profits nice and tight. 2 times ATR on the 5-minute. And then we have a nice tight stop here below the low of this candle. So it's kind of wide, all things considered, but on this kind of stock where it's that kind of volatility and these low floats, I'm okay with the risk reward here. So it's okay. And again, we got a net positive P&L for the day, even though we took 1 win, 1 loss. And the position sizes were just a product of that same kind of using the right system and math for things. So if we think about it, right, I have $12.96. Let's just say $12.50 to $13 in this trade. In order for me to break even for the day, I'd have to lose $6.41. Therefore, I know exactly how far down this has to come in order for that to happen. Right? My stop loss is above that, so I'm safe. Therefore, I'm guaranteed a net profit for the day. Okay? And I also have dividends and stuff and these long-term growth positions supporting that, so I just have long-term growth overall, and that's how we get this result where the portfolio just goes up over time. Okay? So if anyone is struggling and you're not seeing that same kind of upward trajectory, these are the things that you can start to put in place for yourself if you agree with them, right? If it doesn't make sense, then don't do it, right? Ask questions until it makes sense. But if you're struggling and you're not seeing those kinds of, slow, consistent gains over time, and your portfolio isn't still growing, whatever you're doing may or may not be working. But that doesn't mean that you're a bad trader or that you don't know what you're doing. It just means that you need something else in place to kind of support your to offset your risk until you can figure it all out. So, and that's all we're doing. This is a $2,000 account. I'm not going balls to the wall on these trades. You can see it's $12. Could I very easily go in and trade SPX every single day and make a net profit? Sure. Is that stressful? Yes. Why would I do that to myself? Is it long-term sustainable? Probably not in most cases. Unless you're really, really good at cutting that risk short, it's going to hurt you more than it helps you. So, I mean, I know I can do it, but I also know that it's stressful and I don't like doing it. So there's no point in doing that. I'm definitely not going to do that on a $2,000 account where I'm trying to show you guys slow, consistent gains that compound over time. So we're 4 months in on this account and it's $2,083. And my goal is at the end of 5 years to have it 6 figures or more. So I got to get there. I can't just YOLO on stuff. So I'm just going to kind of flip through these a little bit just to kind of show you guys where we're looking at things. GETR is just kind of chilling, still going sideways, and we locked those profits somewhere around here. So so far so good. I don't remember exactly what the fill was on that. 43.49. Now that was a market order fill. So they filled us right around here. All right, so that's kind of where we locked that profit. And I'll make that a yellow line just so we can see. BRSH still just kind of chilling, not really doing much. CCCC blasted a little bit, but then it fell. So that's probably, I'm going to go on a limb here and say that we're probably going to see some pretty hard sell-off on this guy. If it doesn't, like probably as soon as it breaks this right here, we're probably going to see a nasty sell-off. At which point, we're not in it anyway, so it doesn't matter. HLP, it kind of recovered, and then it kind of didn't, right? It's going sideways. We're out of the trade. There's no reason to look at it. View, or I'm sorry, not HLP. What was I doing? That's the one we're in. It's just going sideways. This is the level we have to hold on this one. But we have the strong psychological support of $1. So as long as that doesn't get stop loss rated, we should be okay there. I'm going to erase this line, though, because we're already in the trade. View, same thing, right? It just dipped, pulled back, went sideways, and then it's just kind of being erratic. So we know from experience that it's likely going to rip, but there's no guarantee it's going to rip. And we just made the decision in the moment to cut the loss, and we're still net positive for the day. So no hard feelings. We simply move on. I get a nice little tax deduction at the end of the year. And again, I get a full refund on those. So every single dollar that I lose, I eventually get back in the form of deductions and credits and stuff. And then I can just put them right back in my portfolio until they become winners. And it stacks. They just stack up over time. I get to deduct $6K. That offsets my refunds, like my credits and other income and stuff. And it's nice. Just like playing a board game. You just got to know the rules and the moves. He's pretty good. Oh, wow. Slim pickings. I'm sorry. I just saw that you got 100% on Google. Good job. Was that a 0 day? Are you being risky? Webull needs a parental guidance, so it will block stocks that took money from us for at least a month. It's not a bad idea. There's really nothing wrong with wash sales. You just have to understand them. So if you do find yourself constantly trading a stock that you're just losing, then yes, that's absolutely on you to kind of step away from that position and be like, why am I still trading this? Like SPY 0 days and Teslas and stuff like that. If you can't figure it out, you don't have to keep throwing real money at it. You can practice those, even if it's just drawing lines on charts, right? That's what I do for you guys most of the time. I just draw lines because I don't want you guys throwing money at stuff that doesn't make sense for you. Today, obviously, I'm live trading just because I have the free cash and just to show you guys, like, you know, the kind of things that we can do, just getting in and out nice and quick, and how you offset risk reward and your profits are greater than your losses if you are able to be consistent and stuff. But if you can't figure that out, you know, passive income is the bedrock of any portfolio growth. There's not a billionaire alive today that isn't the result of passive income. You have to work hard sometimes to get it, but you know, most of us have already worked hard for a lot of the money that we have, and there's no point in just throwing it away blindly. And if you did throw it away blindly, you could still get it all back. You just have to know how. That's where your taxes and stuff come in. So again, it's not, you know, if you lost 20K this year, you can get it back on your taxes in the form of deductions and stuff. Now, that doesn't mean you're going to get all 20K back this year, and you're not going to get 20K cash. But you are allowed to deduct 100% of your capital losses with indefinite carry forward. So anything you can't use this year, it stacks. It goes to next year up to that limit. And then again, the next year. You just have to keep track of it, and you have to know how it all works. So I can't give you tax advice, but I can give you education and insight and my personal approach. And then you can take that to a locally licensed tax professional and say, hey, is this guy full of crap? And then they'll be like, no, man, that's legit. Some of it, because some of it's going to differ on your circumstances and stuff. But yeah, you just got to be proactive about this stuff and learn as much as you can. Latvian, for the daily watch list, what time frame candle close do you look for? Are you referring to the one that I post or the one that Lee posts? Like the one that I put in analyst ideas and in the bot and stuff? Or are you talking about the one that Lee posts every morning? The one I post. Usually the 5 minutes pretty good. It depends. Like you just kind of have to put a little bit of planning and analysis behind it. So let's go ahead and look, right? Because that's the best way to answer that question, is to use an example. Let me just go to Analyst Ideas real quick. And I'll grab that image. And I'll open it in a new browser. And I'll come back here so I don't miss you guys' chats. All right. So if we're looking at like JD, for example, let's look at JD. All right. Now I'm just going to move this over to my other window here so I can plot the levels. I got 1, 2, 3, 4, 5, 6. All right. So the entry price, the entry threshold, is $27.31. Now that applies, in this case, both bullish and bearish, because it's a break level. It's a level of contention. Most of the time they're different levels. Sometimes they're the same. The bullish target's going to be 27.80, and the bearish target, I'm sorry, the second bullish target is 28.18. All right. And then the first bearish target is going to be 27.03. Okay, so we're above the yellow line here so far. And then 26.83 is going to be the second bearish target, right? So this is kind of the trade setup right here. Okay. This is the line of contention. So far, we're holding it as a support. So the approach on this one, if we look at like the 30-minute, was a push up, a retest of this previous support and this gap, right? Because if it falls through the gap, that's where the fill comes in, and that's the setup for there, right? Till then, we just have this level of contention. So really, we're just looking for a retest, which we kind of got at market open, and then a push to the upside into these levels here. So if we kick it down to the 5-minute, you know, we can trade the color change, right? Like this could have been the entry threshold right here. I'll make that orange so we can see. At which point, you know, this might be the setup right there. Now that's disproportionate risk reward to the downside. So maybe we don't take that entry, right? We can always wait for a cleaner test of this level and then something like a bullish engulf or something like that up to this level, right? That's kind of what I personally like to do with these. Some people just like to do a candle close over the level and then an entry, in which case, you know, like this one would have been a good one. This one would have been a good one. It's all about where the risk is. Now, do you have confidence that this is likely to go to second target? I do. I don't see any reason not to, but you know, if you don't see an entry that you can't identify or have confidence in, there's no point in trading it. And that's the 5 minutes. So you can also kick it down to the 1 minute, and then you can look for different stuff. Like this is much better, right? See how low that is to the line, and see how small that risk is. You could just trade those all day long on these. Now, obviously, like this one here, same thing. It's a little bit farther away, right? Like if we draw a halfway point between those two levels, this one's kind of at the halfway level, so you get a 1-to-1 risk reward to that first target. But as we go lower, right, and I'm just talking about the engulfs here. There's one here, it's below the halfway point, so that's a better risk reward. And then this one here is even better. So the setup on this, would be something similar to this, right? You just use the lower of the two lows. The entry would be the break, and then the first target right here, that's a 1-to-3 risk reward. Now, if you're trading the option side, obviously you have to make accommodations for that. That's not the one I was looking at. HLP, there we go. Sorry, I had to go back to my actual position. But does that make sense, that approach? The idea is these are structural trades. So if the level holds and you see a confirmation, you can kind of trade however you need to. But the idea is that once you see a confirmation, you take a trade with a defined risk, and then it should hit that target more often than not. And if it doesn't, you've got that nice tight risk in place, so it doesn't matter. I shouldn't say it doesn't matter. It's less significant. Okay. And this will be on the recording because I made sure I wasn't muted this time. Because I like to do that. Anytime I explain something well, I'm always muted. So yeah, this you can watch as many times as you want. You can apply it to all of the stuff. Ooh, I didn't like that. Let me just take an eyeball here to these guys. So you can see with GETR, right, we kind of hit that near the top, right? It doesn't look like it's coming back for a little bit. It's just right back where it was. Like it's not selling off hard, but it's back here where it was. So it kind of likes this area. So we sold above that, therefore net profit. Brush is kind of getting into a better territory here. And it did kind of peak over this. You know, so like that would be the range we're looking to break, and kind of had a break here, but let's see if it breaks. retests, and then pushes, right? If we're ever unsure, we could always look for a retest. Otherwise, you could just trade engulfings and, one of them will hit, right? If it goes up. This guy, we kind of just called. There's just no point being in this trade. We are expecting some pretty significant sell-off below this level here. So last time it bounced, it held. If it comes back down here, that's going to be probably a pretty nasty sell-off. View is just kind of puttering around. It's not really doing much. It's just it's released right now. This guy, we're going to see if that's going to sell off hard and hit a stop loss. I'm going to hold control here really quick. And it needs to reclaim $1. So I'm not going to just blindly sell it just because it dips below. But I do want to see where the candle closes and then see if that candle gets broken for this particular type of trade. Now, this is a pretty big position here. So let's see what the this is. It's down 10.8%, and I'm down a total of $1.40, right? Because remember, I calculated exactly in my brain really quick how much I need to lose and then how far this needs to go for that to happen, and we're well above that. So I'd need this to go down about 4 or 5 times more this range just for me to lose that. So in theory, this should reclaim $1, right? Which is why we don't necessarily just want to panic sell. I just want to see where it's at. And I want to see if it can reclaim that dollar level. Let me make that nice and fat too, and I'll make it a dashed line. There we go. So basically right now we're kind of locked in, right? It has to break this range in order for me to decide what to do. If it breaks above this, I'll continue to hold it. If it breaks below this, I'll sell it. Sorry. And that's with no questions asked. I'm not going to hesitate. I'm just going to hold control and just hit 3 as fast as I can on this one. Right. So in theory, they should have just grabbed a bunch of shares and then they should be pushing it. Now, this is not the same as a sell side liquidity sweep. This is just a release of price that has had some support. So I'm not too confident that it's going to shoot up, to $2 or something like that. That's kind of why we gave this one a wider range, because there's just less going on, and it's very, very low float. You can see it's 2.87 million free float with 12.37 outstanding, which means 10 million shares are restricted on the stock, which means they could drop an offering, could all be employee packages and all that good stuff. I don't want to get involved in an offering. Therefore, I'm just trading this little push pull. And let's just check this real quick. All right, so $3.82. Might actually add. Oh, no, I'm not going to add to this. There's no point. Sorry, I was thinking a little too much. So now we're at 846 unrealized, so $1.10. So if I sell this right now for a loss, sorry, that'll bring me down to $5.31 profit for the day. Is that huge? No. Is it better than a loss? Yes. And that's all I care about. And did I put a lot of analysis behind all these? Absolutely not. I just grabbed a couple reasonable candles when I saw some volume doing things I like it to do. It wasn't like I didn't have to plan anything elaborate. I just waited for price to come into an area that I like based on common sense and kind of supply and demand. And then I waited for the volume to show me what I like based on the story that those candles tell me. And then I just placed a buy that was appropriate position-wise, size-wise. And then after that, I don't control anything else. I only control my risk exposure. So if it goes up, it goes up. I lock profit. If it goes down, it goes down. I lock a loss. And it's one of the worst days of the year to try to be trading stuff, especially these little low float guys, because you don't want to mess around on quad witching day. But here we are. All right, so we're getting a little bit of flicker here. Sorry. Which will be pretty good if we can get some volume behind it. Now, I don't want that to push to the downside, though, so we're going to watch the time and sales very closely. And you can see there's not a lot of activity here. Like it's relatively dead. And that just, it doesn't mean that there's not potency. It just means that there's not a lot of action. There are some algos sitting on this thing. We got a zone recovery bot chilling here with these 5K walls. Then we got another one here at $1.18, aka near the target. And then we get a couple in the 130s, and then we have a matching one, 10,000 shares, so it matches two of these walls, which means this was at some point split at 80 cents, which we're not going to let it get down that far. So the algo here is anticipating a bullish move. That's the only reason I'm still in this trade, and it hasn't broken this low. So we're expecting them to push the price down, grab a bunch of shares, right, accumulate, and then release the price to the upside, and then let volume trickle in and push the price up naturally. Now, the volume is not here, which means they may shuffle the algo around at some point. Depends on whether what their particular approach is. But just the existence of these walls is a good sign for us, or for me, I guess. As long as this level holds, I should be fine. And I can justify that with things that I'm seeing. So it's not blind hope or anything like that. And the cool part is, since I'm only really risking like $1, that would be a weird thing to get stressed out over, right? So it doesn't matter even if it goes up, right? What am I making? $1.20, $1.30? There's no stress in that balance. I will probably cut MBI here pretty soon. Just check that one real quick. It looks horrible in the 1 minute, but I'm really waiting to see how it handles at 12.98 level. Let's see here. Kick us down to the 1 minute again. And I'm only looking at the 1 minute again just to identify the specifics, like the fine tuning of it. The overall setup here is still in the 5 minute. And that's just that big old fib retrace. Now, if we look at this in terms of liquidity, right, we're below the 50% level. This is known as premium. And we've had a quote unquote sweep right here without the volume stepping in. So that's not a real sweep, but it is at least some accumulation. Now, if I zoom in here, you can see that there is abnormally large volume here from the sell-off and the absorption, which is good enough, but we really need to see that volume step in. Otherwise, that's it. I see CCCC is pushing up and BRSH is kind of fluctuating a little bit. So let's look at those real quick. Yeah, it's kind of going sideways. So again, I'm really, really waiting to see what happens when it fails this level here. That'll be the interesting time. BRSH, same thing. It's just kind of chilling in this range. So for this one, right, you could either get a massive sell-off or a retest, right? But the cool part is we drew these lines a while ago, so easy enough, right? Mattster says, thanks for sitting into he didn't stutter like I did. Thanks for sitting with us. No trading for me today. Headed to some work calls. Have a great weekend, people. Yeah, that's awesome. I mean, you're killing it, man. You don't need to trade every day. That's good stuff. You're letting those dividends roll for you. That's awesome. I love the new plan. Honestly, it just takes stepping back a second and being like, wow, that's making it way more complicated than I had to. That's awesome. That's kind of the direction I want to start taking here with everyone, so that, you guys understand that trying to day trade and all the speculation and stuff is good when you can figure it out. But when you can't figure it out, you got to have some sort of passive income or some sort of passive growth to stabilize things. Your bank is going to offer you 1 to 2% annually on interest in your cash that you have in there. So you can make consistent contributions to a savings account and still have a net profit over time, right? It still compounds. It's still 1 to 2% annually. It'll just take longer and it'll take more contributions for you to really ramp it up to kind of match what you can get on higher strategies, but it's still a strategy, right? Now, does that beat inflation? No, not in my opinion. So maybe it's not the best, right? So then you look somewhere else, right? You kick it up to a broker, and a broker maybe offers you 4 to 5% annual interest on settled cash. So you maybe just stash your money in a broker and don't use it to trade. Just keep adding to it. Maybe that is good enough for you. If you give your money to an institution, they're going to do 5 to 8%, and then you got to pay fees on it and stuff. But 401k, they get price matching, maybe 6 to 7%, maybe 8% if you're lucky. That's pretty good. That's better than a savings account in most cases, but you're still kind of relying on someone else to manage your money and all that good stuff. So you're kind of at the mercy of circumstance. But in most cases, it's still better than 1 to 2%, right? So it's still justifiable. And then if you do something like the rags to riches stuff, all the stuff that Matster, myself, Snowflake, I'm going to get out of that trade because it failed that level. I think it did. I'm not looking at it closely. The low is 96 cents, and we're at 96 flat. So I just don't like it touching that level. I consider that a loss. That's okay. I got to wait for this thing to update. But yeah, so if you're building your passive dividend income and you can pull 12 to 20% annually, and you're losing 60% annually trying to figure out day trades and stuff, it makes sense to put most of your money into the thing that's going to get you that more stable profit over time. And then when you figure it out, sure, you can, that's icing on the cake, and it should speed up that compound growth process. But if you can't figure it out and you're constantly red, maybe it's time to reassess some things. And, whether it's, mixing in dividends, maybe using a tool like StocksBuddy, or a different indicator. I'm not trying to pitch StocksBuddy. I'm not a sales guy. I don't really care what you guys use as long as you find success. Or maybe it's just not trading certain things that you're constantly running into a wall on, like SPY or Tesla. Maybe it's just kind of reassessing your approach to things. But ultimately, that passive income is the safe route. The Latvian want to know something dumb. Boogie. Yeah, go ahead. What's going on? Take care, Master. It's good seeing you, man. Let's go ahead and look at BRSH here. So, so I just want to keep an eye on this one. And we know, right? We know that anytime we trade a range, we see an impulse and then a pullback, right? And that pullback, the end of that pullback is what establishes the range. And that's true for anything. So in this case, we've got the base of the range right here, right? AKA the top. I'm looking at this right here, this impulse. We've got the base, we've got the peak, which is upside down because it's a bearish one. And then we've got the kind of the solid base, or this is the actual base right here. This is kind of the origin. Let's call it the origin. It's a lot easier. So origin, peak, and then base. Price needs to break out of this range unless you want to just trade the bounces from the support to the resistance. So if price stays in the range like it does all the time on SPY, you can trade from here to here pretty consistently until the range breaks. And then once the range breaks, you trade the breakout, right? If you're trying to trade the opposite, you're going to have a hard time. Latvian, pretty sure I fat fingered my limit order on Johnson & Johnson for my dividend account at 161 rather than 151, wondering why it was showing that I'm in the red. So you mean you bought more? You bought more shares? Or you mean you sold them for a loss? I have made so many mistakes just from not hitting the right button at the right time. It's embarrassing that it still happens, but that's all part of being human. We rush sometimes. We don't pay attention to every single detail. We can't. Our brains just don't work like that. That's kind of why practice and having like checklists and stuff are super important. I personally, what I wish we could do on Webull is take certain tickers, certain positions, and prevent ourselves from selling them without a confirmation. I really do wish that brokers would put that sort of thing in place, but so far they don't. Like if I never want to sell Johnson & Johnson unless it prompts me to confirm that I actually want to sell it, I shouldn't be able to. That should be a feature that I could right click this and say, okay, protect this stock from myself, right? Because everybody makes those mistakes. It just happens. It's all part of being human. But brokers could at least step in and be like, hey, here's a cool feature that you guys all want. Oh, wow, look at that sell-off. Woo. Hell yeah. And that's why we lock our profits and we cut our losses. Oh, okay. So you bought it higher than it was. That's okay. I mean, are you building that out long term for dividends and stuff? I mean, averaging up is okay when it's appropriate, right? It really just depends on what you're trying to do. Johnson & Johnson, I think, has strong growth potential. So I'm not personally worried about averaging up on it. But you have to understand the nature of the dividend payout if that's what you're going for. It's going to factor in. So if you bought a share today, right, that share, okay, let me just try to explain this. I know I've tried to explain it a couple of times, but I just want to make sure that everyone kind of understands it. If you buy a dividend share today, like let's just assume this whole thing is a share that you could buy right now, okay? If you buy that share, the price that it's currently at has a certain value, okay? It's worth $154.45 now, right? Part of that price is the dividend payout, okay? So if you buy it today, and then it runs into the ex-div date, okay? And then you have, you still hold the share through the ex-div date. What happens is the dividend portion of that, the payout, the actual cash part, gets separated from the share price. The stock value gets adjusted down. You don't lose any value in your portfolio. It's just offset to the pay date, right? So that results in a P&L discrepancy, right? You're like, oh, what the hell? But the shares that you've already owned, okay, the shares that you've already bought previously, they've already had their dividend adjusted. So when dividend time comes around, you'll receive two payouts in this example. Like let's say you bought one a couple quarters ago and then you bought one today. All right. Next time the payout comes around, this payout will just offset the loss that you took on this share's value because the adjustment, it's just offset. But this one is already offset. So you've already collected one here, but you'll also get another payment since you're kind of in the club. So think of the dividend portion of it, this part that gets separated, as like a ticket that gives you membership to a club that entitles you to constant payouts over time. And that's where you get the net profit. So in theory, if you're buying a quarterly dividend payout, you need to hold it at least 4 months for you to get a profit from the dividends. So you can always trade the P&L on the shares, but just so everyone understands, that initial adjustment just kind of offsets after that first payout. So you really want to choose strong companies when you do this stuff, just so that the share price also goes up over time. Because if the share price can't go up and offset those adjustments, the company's likely to stop offering dividends, right? And that's where you see like the high yield ETFs. They have to adjust their dividends back down because they're too aggressive with the payouts. And then they realize that the stock can't go up fast enough to outpace that. I know it's a little bit of an advanced concept, so I'm sorry if I went too fast. But that is something that you should be aware of. That's why I like to have a mix of the monthly ones and the quarterly ones. Okay, you're not wanting to touch it for a long time. That's awesome. All right, so if you bought a share today, right, let's go through specifics because that always kind of helps. And we'll go to stockanalysis.com. Okay. And I want to make sure you guys all understand this stuff because a lot of people buy dividends and they're like, yeah, I'm making money. And then as soon as that ex-div hits, the position just drops and they're like, ah, crap, what the hell am I doing? So in this case, the dividend was November 20th. I'm sorry, the ex-div date was November 20th. So your next ex-div date is probably going to be in February around the 20th or something like that. Okay, so let's come back here. So you bought it today. Towards the end of February, you're going to have the adjustment on that particular share that you just bought. Okay, and then on whatever payout date, I don't know what the schedule is on that. It's like a month later, 3 weeks later or something. So 3 weeks after that adjustment in February, so in March, you're going to get the payout back right here. Okay. I'll just erase this. And then any shares that you've previously owned, you're also going to get a payment on in March. Okay. Those are going to be net profit. This one from this share is just going to offset that, the adjustment. Does that make sense? You set it to a monthly buy. Okay. So then all the shares you buy from now until that ex-div date have those little tickets attached. And then once the ex-div date hits, the company's going to collect your ticket for you. And then that'll kind of get you in the club where you can just keep getting paid every payout date for those shares. But every new share you buy needs to have the ticket pulled off and given to the company on the ex-div date. So does that make sense? Is that an easier way to explain it? Devastator says, I have a question about divvy stocks. Can you just buy the day before the XDiv and buy a long put, then collect the divvy and close the put a few days later to pay for the loss of capital after XDiv? The short-term answer is yes and no. So no, in the sense that your puts will also be adjusted, because it's not it's not the price dropping from people selling it. It's a market adjustment. It's adjusted by the exchanges. Not even the company itself. It's just to offset by separating the payout from the share, and then you get it back in the form of capital, which is where the actual advantage from dividends comes from. It's not just the profits. And then yes, in the sense that if the dividend, if the XDiv causes people to FOMO and panic sell, then yes, the price will naturally drop separately from the adjustment, and then you can make profit on your put. But the put itself should be adjusted as well. Yeah, there's no cheat code. Sorry. The only cheat code is to look for financially strong companies that are making money, so the directors can make money. And then you want the dividends to be a product of that. So those directors need to have a history of taking care of shareholders. It's very difficult to do that with special dividends. That's why you really have to be careful with those, which is also why those are the ones I prioritize, locking those profits faster. If you can get the same amount of profit without having to go through the XDiv, why not? However, stocks like Costco are growing. They're financially strong. They have a history of rewarding shareholders, and they just offered a special dividend. So that special dividend, if you're already holding shares from the last, if they've already had their ticket removed, basically, if they've already been separated from the share price, the adjustment won't affect that special payout. So that's raw profit for you. But if you buy it now, that special dividend of $15 just offsets. So you don't actually make a profit on that. So the cheat code is to get in those stocks early. It's good that you're thinking about that stuff, though. It's a very good way to kind of think outside the box. There's just, unfortunately, that particular approach won't always work. Geo, if I have options on dividend stock, do I get paid dividend? No, only if you're, okay, so, I mean, yes and no. So if your options are something like a covered call and you have the shares and you're writing an option contract against them, then yes, you'll get them for the shares that you have, but you don't get the dividend unless you have the actual shares. If you sell them right after the XDiv date or on the XDiv date, you still get that dividend payout because your name still goes in the book. The only caveat there is if you short sell them, XDiv date hits, and then you, if you were to go through the dividend payout date, you'll actually pay because you owe that dividend payout to the owner of the shares that you shorted from. So it's a little bit convoluted once you get into short selling, but no, options don't collect dividends. That's why there's option ETFs, basically. That's a great question. I like that. Duco, I was wondering the other day. Yeah, these are good questions, guys. Keep them coming. What happened to the one with the $8 special dividend? That was MBI. And that's, again, I am just keeping the one share here. So I bought 9 shares, I think it was, down here, 1080 after the announcement, or when I saw it. And then I locked in profits on 8 of them at 20 plus profit, whatever, just to guarantee net profit on this one share that I have at $10.80. So what's going to happen is on the XDiv date, so Monday, this price should drop down to $2.80, and that's going to freak people out, right? And the only reason it's doing that is because it's being adjusted. The dividend portion of this is being separated from the share. So you're not really going to have a loss overall. You're just deferring the dividend portion of it to the payout date, which is the 22nd. I think that's Friday. Yeah, next Friday. So the order of events here, right? Monday hits, share price drops. Okay. Let me erase that. Sorry. Monday hits, share price drops. Company logs my name in their book for this one share. That entitles me to this $8 payout over here on next Friday. Okay. If the and at that point I just break even on this one share, right? Because I've already made net profit on this position. This stock could drop all the way to $0. I'd still be net profitable, right? But if I hold the share through here, I'm guaranteed an extra $8, but it really just offsets this one share. So that's one portion of it. The other portion is the actual share P&L. So from 280, depending on where it goes, like my average will be lower than 280. or my cost basis, I should say. So then it can go up or down from there. Or I'm sorry, not 280. It'll drop to whatever the current market price at close of day on Friday is, down $8 basically. So that should still be below my my cost basis. So I'm just going to make a profit on it if the price goes up from wherever it's adjusted at all. If it's adjusted and then it continues to drop because people are panic selling, then I will realize a net loss, small one. But then I get the $8 dividend to kind of offset that. And then really it's just, I'm not losing anything because I already locked in more profit than any of this is worth combined. So it's a little bit messy until you get your head wrapped around it. And then it's like, oh, okay. So if you think you're just going to buy a dividend share right before the ex-div date and then sell on the ex-div date and get a profit, that's not entirely how it works unless you sell the share for a profit after it's adjusted, if that makes sense. I know I kind of went on a little ramble there. But yeah, that was MBI. I just have this one share. I'm just curious to see if it's going to hold this level. Probably won't, but you can see people are starting to, like the day before the ex-div weekend, people tend to panic on these. It's kind of funny to watch. If I was still like concerned about my position, I probably would have just sold it up here where I was going to yesterday, but don't need to. Devastator. I get confused about which divvy stocks are even worth it. I learned a few years back that high dividend yield mean higher risk on the underlying stock. And yeah, I mean, kind of based on what I just kind of walked through, right? Like this is a very high yield dividend. I mean, the stock was down here around $7.50 or something when they announced it, and it shot up to $14, and it's an $8 dividend. So it's more than the price of the stock. So you got to kind of take that into consideration, right? If it's high yield, like Tesla, for example, is very high yield. There's a lot of volatility in it, but it's a monthly payout. And I know that eventually, as long as I do it correctly, the payout from the dividend will pay for the shares and I get those for free. So the sooner that can happen, the better, as long as you can do it safely. But we can also lock in those profits on special dividend things so that are high yield and avoid the adjustment and offset altogether just by collecting those profits. So if we look at Kim, for example, and I kick it down to like the 1 hour, and then I just look at my orders here, you can see I've done that. I've done, so the first trade here, right? I bought at 1868, sold at 1991. The original dividend here was 9 cents per share. Okay, and then they had a regular dividend of 20 cents per share per quarter. So 29 cents worth of adjustment occurred one time on the ex-div date, and then that will be paid to me on this day. That offsets, okay? But on top of that, what I've done is taken that same 29-cent range, and I've traded it multiple times just by entering the stock, setting a sell order 29 cents above, and then collecting those profits over and over and over and over again, separate from the ex-div date and all that good stuff. So it's just a really easy way to multiply those dividend payouts. I know a lot of people crap on dividends because it's like, oh, it's only 13 cents. But then you can turn that 13-cent expected profit into like $1.60 just by doing stuff like this. So you can still speculate on these if you want. But you got to think about it in terms of, if I'm just buying this to collect a 29-cent profit and I can do that at least once, I'm done. I don't have to trade that stock again if I don't want to, right? I accomplished that plus some here. I actually ended up with $1.23 on that first trade because I didn't set a sell order. It just happened to go up. But then the second one, I got a 19-cent profit just because I got filled weird and I put the wrong number in. And then, subsequent buys and stuff. I have 2 shares that went through the ex-div date. So I'll get 29 cents times 2, right? And that just offsets those 2 shares. And then beyond that, I got 2056 plus 2085 is 29 cents. So I've racked in that 29-cent profit multiple times. And the cool part is, since I held these through the ex-div date on 2 shares, I get this in the form of cash, which means that I can realize the 100% of the loss I can deduct, right, on my taxes. But on the dividend, the capital portion, I only have to pay roughly 35 to 40% taxes. So really, that's where the power of dividends comes in when you're dealing with bigger amounts, because that heavily offsets your small, I say heavily and small in the same sense, but it very well offsets your capital gains up to those limits. So it's just kind of a roundabout way to manage your taxes initially. And then it's a roundabout way to get just quick P&L, as well as to then multiply that P&L, as long as you do it the right way. And like some of these like HTHT, for example, I haven't sold for a profit once. I just bought my initial share and I'm selling it up here if it goes. And you can see here, I've just got the one buy. I haven't sold this yet. I'm just looking for that 93-cent per share dividend. And if that happens, like right now, I'm currently sitting at negative $1 on this one share. Obviously, all these other ones have racked in multiple times their dividend payout, so I'm not worried about one share. But the lowest level here is that I hold it through the XDiv, get the adjustment, potentially realize the loss if I don't want to recover it, and the stock doesn't come back up. And then I get that in the form of a tax advantage, right? I break even, more or less, maybe a small loss, but I get that tax advantage. That's really what I'm after when I do these. However, once the adjustment happens, I can lower the stop loss to just above my break even, and then that difference right there, in conjunction with the dividend payout, gives me a net profit. Or if the stock drops, I can just trade it like a regular position, buy at support, recover the position, get out at break even, and that's still net profit, right? Or I could just cut the loss altogether, realize the loss, and then collect the dividend payout, still get that tax advantage. So it's just kind of playing the rules one off another. So hopefully that makes sense. But yeah, the high yield, high risk stuff like clip, you can't really rely on that long term, which is why I just have these in here early on in the account just to get aggressive and build them up fast, which they are. Like if I go here and I look at my dividend, if I look at clip, for example, this is not huge, right? I got $4.18 here and $8.13 there. But considering the investment and the fact that they're frequent, that's a pretty good return on that size payout, right? And you got to think about it. Initial offsets. The initial dividend payment per share, right? Every share is different. Just offsets that initial adjustment, right? And then subsequent payouts are net profit. So if I look at like Tesla, for example, I've gotten multiple payouts there. 7 shares, then 13 shares, then 21 shares. So on these 7 shares, this $4.04 just offset as soon as I got that first payment. And then on those same 7 shares, I've gotten profits. I've gotten 58 cents per share and then 60 cents per share net profit without having to do anything other than hold the shares, right? The position itself has gone down. I'm negative 4.43%, and I'm sitting at $12.04 loss, but I've gotten a profit. And then on these 13 shares, right, this payout offsets 6 of those, right? And then on this final payment here that I just got, I've gotten 60 cents per share on 13 shares as pure net profit, with the remainder of those just offsetting the other 2 shares. So the next payment in January on all 21 of those shares, I'll get a net profit, right? And then whatever else I buy in January will offset on that next payout. Does that make sense? So it's just letting those net profits just build and build and build and build. And, like if I look at Johnson & Johnson, right? I got 3 shares. Okay, 3 shares only. And I've already collected the offset for those. So the next payment that I get on Johnson & Johnson, which will be in March, February or March, I will get pure profit. It'll just be net profit. Because those 3 shares don't have to offset anymore. They won't be affected by the adjustment like that. I really hope that makes sense. Let's look at SCHD, I think. And this is a really good way to just kind of get the ball rolling on tracking this stuff for yourself too. Like these 2 shares, if I just go to the amount here, it's offset. So my next payment on Charles Schwab, the dividend ETF, will be a pure profit on that position. Okay. So it all just kind of works out if you have a good balance, right? Obviously, I don't want everything in Tesla or everything in Clip because that's high risk. So you got to have a balance there. And these are all just kind of transitional positions as well. Like I'll hold these for a couple of years, probably. Not the special dividends. I'm not holding those very long. But if I hold the like Johnson & Johnson's a very long-term one that I want to trade. I just want to hold it for a long time. Tesla, I want to hold at least a year, right? But I'm not going to be holding that at the end of the 5 years unless the stock continues to outperform everything else, right? I'll transition that into, exactly, just like Coca-Cola. That's a nice stable one. Or I'll put more money in or maybe in Vanguard or something more stable, IBM, Microsoft, something like that when the account's bigger and it's more appropriate, just to take some of that risk off the table at the cost of a stabler, more consistent growth rate, right? So short term, I want to be aggressive. I want to take a little bit of risk, and I'm going to balance it out with the longer term positions and bigger positions and allocations and bigger chunks on the safer stuff, and then just kind of balance it so that it doesn't hurt me too bad. If they suddenly withdraw a dividend or something, I'll have to sell that. But I'm just going to roll these positions out over time. And as the series goes on, as the Rags to Riches series goes on, I'm also going to incorporate other strategies. Like right now, I'm above 2K, which means I'm at the area where I can start taking things like leaps and spreads comfortably. Like this Neo spread, or I'm sorry, the Neo leap right here is 30% up. That's an extra 11, 12 bucks now. It just went up as I was talking a little bit and then came back down. That I didn't have before, that I can just lock in right now and just grab another spread, right? And I can just rinse and repeat that process. But I like Neo. I think it's got a lot of potential for where it is. Obviously, I'm not going to hold that through 2024, but I could, right? It's got a lot of potential, and it doesn't cost a lot of money. Sorry, let me catch up on the chat here. So Devastator says, I tried holding a few high yields like AGNC for like 6 months. Even with high yields, the value of the stock never seemed to recover. Yep. So that's kind of that's the risk, right? So you've got to consider the dividend stuff separate from the share P&L. And that just boils back to the purpose of dividends, right? So again, you've got the capital portion of it. So you're taking a portion of what you bought as a share, converting it into cash, and that reduces the tax burden on that amount. And then you've got the negative share P&L if you realize a loss that you can claim 100% of against that dividend payout. So there's still an advantage there. That's why I don't really mind taking them, but you don't want the bulk of your capital on that risky stuff. So if it is high yield, it shouldn't be a huge position. So like you can see here with Tesla, $260. So just over 10% of the portfolio, maybe 15% is in Tesla. It's high risk. Whereas JP Morgan's more stable. I've got a slightly larger amount in there. Clip is $300. That's pretty aggressive for what it is. But again, it's early on, and this is kind of what I want to do. I like the payout for this one. And then Johnson & Johnson, which is the most stable one besides O that I have. This one I kind of started building late. But Johnson & Johnson, I have $462 in. So it's more stable. Therefore, I'm putting most of my money into that. Let me finish reading before I just ramble some more. Devastator again. Now I see high yields and I pass because it feels like a trick. I noticed your divvy picks always have reasonable yields, so they are safer. Good stuff. Yeah, that's they don't all have reasonable yields. So there are some out there that have insane yields, thousands of percents, and those are almost always going to hurt you. So at that point, you kind of just have to look at it for what it is. You're getting a tax advantage in the form of a realized loss and then a cash payout. So, but the cool part is once you understand how that all works, you can leverage that tax advantage and help yourself out. So it's a good conversation. Stickman. So I had a question, if I can explain clearly. So for taxes, not asking advice, just how it works. When you receive cash or shares for the dividend, how do you reinvest or rebuy the same dividend or another dividend? And how is it not counted as a profit and rather an actual investment? I know you mentioned there's a dividend tax rate, which is slightly different for that long-term and short, though that may not be related to my question. So the answer, I think the question you're asking is, does it count as a realized profit when you reinvest? And the answer is yes. So when you collect a dividend payment, it is taxed in most cases. Again, if you're not in the US or if you're not trading American stocks, the rules might be slightly different, and you might have different types of brokers and accounts. There's all kinds of factors. So you have to make sure that you talk about it with your tax guy or girl. But yeah, when you collect a dividend, you're collecting income. So you have to claim that in most cases, even if you reinvest it. So DRIP does not exempt you from tax liability. It's just a faster way to take the cash that you're getting and then put it into stocks. So if you're not selling in stocks, you don't have the short-term capital gains or losses that you can claim if you're just buying them and just hoarding shares. But if you're collecting the dividends, you're still getting income. So next year, for example, if I just want to trade the entire year and just buy shares and just buy dividends and not do any actual like rolling of positions, I wouldn't be selling anything. So unless something cuts a dividend or something, but I would just be holding shares and buying them. Therefore, the only thing I'd have to claim on my taxes is the dividend income, and I wouldn't have anything to offset it with from this particular system. And when you get up in account size, that's something you do have to worry about. That's where tax loss harvesting and stuff comes in. So I assume that's what you're asking. If not, please feel free to re-ask or clarify. Okay. I mean, if you're getting 110K in dividends per year and you don't have the offsets to deduct against that, you're going to pay a third of that in taxes or more. So in most cases, so you got to be really careful about not taking losses, which when we're new they're pretty common, right? We take losses all the time, so it doesn't really matter. But when you get into the investment realm, that's why you see a lot of like donations and just weird activities from financially well-off people, and that's most of the time they're just looking to offset their taxes. So it's kind of grimy, but it helps everybody in the end. So Debo, have some Tesla and building a bit of KO. Yeah, Coca-Cola is nice and solid. I like that one. Devastator, if you set as a drip in an IRA, yeah, it depends on the type of account. If it depends on how the particular income is treated on your taxes based on how it's received. So, but yeah, if you set up an account, I think you can create an IRA in Webull separately, I believe, under the same login. I think that's how it works. I haven't set one up on Webull. I don't use it for that. But yeah, it should be pretty easy to do. Yeah, and also just to show you guys really quick, I'll show you something cool. Just for fun, I did throw $250 or so into Tesla, and it did start to reinvest already. So I bought 22 shares. I don't know where the record is on this thing. Yeah, somewhere on here, one of these numbers. But yeah, you can see that I got $13.29. Oh, here we go. Show more. So I bought 21 shares for a total cost of $246.54 at $11.74 per share. Then I bought another one because I didn't do the math right in my head. And then this week I got $13.29 and I enabled drip for it, and it reinvested that for 1.14 shares at $11.62. So it actually averaged down for me. And then I manually just executed to get the rest of the free cash just in for 0.32 shares. So what that did is it took all my cash and turned it into shares of Tesla, which is risky. So I'm not telling anyone to do this, but just as a benchmark for performance, I just kind of want to let this drip go over the same period, 5 years, and just see where it lands. I want to see what it does. Just for science. But that account right now is completely hands-off. If I want to make additional contributions, I can. And I might use a smaller amount, like $100 or something a month, just for fun. But it's hands-off now because I'm getting at least one free share every single month. And I can just let that roll. And as long as I keep the account alive, it should be okay. It's not going to turn me into Elon Musk overnight, but it's very easy to just rack up consistent money with drip because you don't really have to pay attention. And there used to be a strategy back in the 80s and 90s called the dogs of the Dow. And that was where, people with 6 figures plus could take the top 10 performing or the top 10 potency stocks in the Dow Jones Industrial Average. So 30 stocks to pick from. You choose the top 10 performing with regards to dividends, and then you just drip them. And then you just rotate them out every year. At the end of the year, you just buy the new ones. And then that just makes your stuff grow over time. But the problem with that is it takes money to make money. And obviously things are a little bit different now. So the strategy kind of fell out of favor for a while, and now it's coming back the last like 5-10 years or so. And they used to actually just publish this list every year, just for everyone to do, because, the more people you have on board, the better off everyone is. So it's the rich folks club. So it's interesting. Stickman. So the reason I'm asking really isn't with the taxes, but rather SSI, as I mentioned to you before. Perhaps, just shoot me a DM, man. I know we talked about it a little bit. But yeah, just the main advantage of dividends at the root of it is just that tax advantage, because you're just taking some of your, basically your money laundering for yourself, right? Just to get out of paying the government. You're taking money, right? You have $10, you turn it into a dividend share. Portion of that is knocked off the price at the exit date, and it gets turned into cash later on. So that's kind of, and then you're in a club and you just keep receiving those dividend payouts on future payments. So it's pretty sweet, because you can claim, your losses or not, and then you're just reducing that tax rate on the dollars that you get paid. So it's sick if you think about it. Whoever came up with the idea, I want to buy them dinner, but I think they're dead. I don't. This has been a long time. But these are really good questions. Thanks for asking. I'm going to end the recording. I'm going to hang out here for a little bit, but I want to end the recording just so that people who are watching don't have to wait for me to stop rambling. So let me end that right now.